Good evening from the Money Desk. South Africa's biggest cement maker, PPC, is banking on increased infrastructure spend by government to boost the demand for cement. The company, which reported its results today, indicated that its business faced a number of headwinds across its markets, including in South Africa and Zimbabwe. We are now joined by the CEO of PPC, Roland van Wijnen. Good evening, Roland. Thank you for joining us.
Good evening.
So your loss widened in the last financial year. Cement volumes are down 5.8%. No doubt this is a strained local economy at the moment.
So the economy is different in the different parts where we operate. South Africa volumes indeed went down by 6%, 5.8% as you mentioned. However, in Zimbabwe and in Samarua in Rwanda, we see still a strong demand, backed by, amongst others, stronger government spending than what we see in South Africa. However, if you look at our numbers, you would always have to bear in mind that there are a lot of noise in the earnings coming from, for example, hyperinflation accounting. So we look at the cash generation of the business, and we're very pleased that in all the jurisdictions where we operate, we are still cash positive. And that has also allowed us to further reduce our debt and to reserve 200 million rands to allocate to a share repurchasing program to the benefit of our shareholders.
Roland, like many others, you are waiting for the South African government to embark on this aggressive infrastructure rollout, whether it's bridges or schools, but it is happening slower than anticipated.
It is indeed, and whilst we are waiting, we're of course focusing on those things that are under our control. So how can we make sure that we run our equipment efficient? How can we make sure that we mitigate the high energy prices that we've seen in the financial year 2023 in order to minimize the cost increases that we have to pass on to the market?
So what has been the direct and indirect impact of load shedding on your business?
So if we look at load shedding on our cement business, the impact is relatively mild because normally we're in close contact with Eskom. And given the fact that we have a lot of overcapacity, those machines that need to run 7 times 24, they don't need to stop. So we can switch off other pieces of equipment. So the impact on load shedding on the cement business in South Africa is relatively mild. Obviously, it has an impact on the overall economy and our customers.
So, Roland, today we've been tackling the construction mafia on eNCA. Surely in your business, particularly on site, you have experienced this in some shape or form. What is your take on the fact that we can't seem to get this under control?
So again, in our cement business, we don't have many issues that we are dealing with in this respect. We had minor issues in some of our ready-mix plants, but overall this sits further down in the value chain. Again, it's impacting our customers much more than that it is impacting our business directly.
So, Roland, meanwhile, in Zimbabwe, also, as you mentioned earlier, inflation jumped to 176%. How does this impact your results and your business activity in that country?
So it impacts our results because the accountants require us to apply the so-called hyperinflation accounting. But if you look at what is happening on the ground, more than 80% of our sales at the moment is in hard currency, be it US dollars or South African rands or pulas. And that, of course, helps us to generate sufficient cash to repatriate. We repatriated last year $10 million back to South Africa. So overall, our business in Zimbabwe is strong and sound. It might not be reflecting due to the accounting rules, but it does reflect in terms of cash generation, which is important to us.
Thank you so much for your time this evening, Roland. That was the CEO of PPC, Roland van Wijnen.